Investing in real estate with no money down sounds great, but what else do investors need to consider before purchasing a property with creative financing? Welcome to Strategy Saturday. I'm Charles Carillo, and today we're breaking down the reality of investing in real estate with no money down. I'll discuss some common creative financing strategies and outline key points that investors need to consider before moving forward. So let's get started. So some of the most popular real estate investing search terms on the internet today are centered around buying real estate with no money down. There are several main strategies that investors can utilize to purchase properties with little to no money down, and we'll touch on them later. However, I did an episode called Zero Down Doesn't Mean $0, which was episode SS167, that's SS167, where I laid out some math around no money down real estate deals. And in this episode, I want to go a step further and break down the realities of buying a rental property with little or no money down. So what are some strategies for buying real estate with no money down? So number one is seller financing. And this is where a seller also acts as a lender. Depending on the seller situation, you might be able to negotiate a no money down deal. Furthermore, ask yourself why the seller is open to this. Can they not sell it for the price they want? Are there major repairs that need to be done? Or is there another reason that maybe you didn't see right off the surface? Number two are partnerships. So where you are partnering with one or more people who will bring the funds while you handle the other roles in the deal. Number three is house hacking, which I talk a lot about on the show, where you're buying the property with little or no money down, typically while using an FHA or VA mortgage. Number four is subject to and assuming a mortgage. Now, these two similar strategies are where the buyer leverages the current owner's financing. Now, subject to means a seller actually keeps the mortgage in their name. And when you assume a mortgage, you are taking the mortgage out of the seller's name. Okay, and it's being put into yours. Number five is borrowing the down payment, where you borrow the money by taking a loan against another property, like a home equity loan, or maybe against a taxable brokerage account, something like this. So what are the realities of buying a property with little or no money down? So when you purchase a property with no money down, you may avoid an upfront investment. Still, you're taking on debt, liability for future repairs and maintenance, and responsibility to the tenants. Let's not forget the tenants, because once we take over that property, we're also assuming those leases, even if they're verbal leases. Now, you'll need money even with a 0% down property. There are inspections, there are repairs, legal fees, closing costs that will need to be paid. 0% deals are hard to come by as well. And I have never spoken to an investor who bought a 0% down property that was on the MLS. I don't doubt people have, but most sellers will entertain creative 0% down financing deals. They're motivated to sell, they're distressed, and typically the investor needs to go out and find them and explain to them this situation that they can do where they're able to maybe achieve the price that they're looking for to sell for, but also what they'll have to do on the back end so it will work for that buyer. And when you're reaching out to these investors or to these sellers, it's usually with cold calling, you're mailing them, you're knocking on doors. I mean, it's a lot of legwork to find motivated sellers. And a lot of these situations and these strategies have worked for years, but it takes a lot of time. It's not something where you're just going to pull up online, hey, where do I find 0% down deals? Now, what are you providing the seller in place of money? So this is a very important thing that people don't talk about that much, especially if you're a new investor. And if you're looking for 0% deals, you probably don't have that much funding or anything really in place of money that you can offer. So this is where it gets a little tricky, and you really have to work with the seller to find out what you can use. Now, what type of track record do you have? Credibility, financial statements? I mean, can you provide to show the seller you will follow through on making payments? Also, I mean, yes, they're going to get the property back, but if I'm selling a property to you and you don't have any skin in the game and something goes wrong, you probably will just walk from the property if there's nothing you can really lose from it. Now, I'm the seller. Yes, I'm getting my property back, but it's in disrepair, right? Now I have to go through and I have to fix the property, and I have to go back and probably put it back on the market or find someone else, or just go back to owning it as I was before. So these are the hassles that can happen. And this is what the seller is thinking about. So you need to find out what you can do to provide the seller to let them know you're going to make payments and they're not going to get the property back. Now, there's a difference between buying and owning real estate. And this is one of the things that you don't really see too much online. So most people focus on the down payment and getting the down payment, and then everything else will fall into place. This can be further from the truth. I mean, you still need to own and manage the property. And this is where a reserve fund for those unforeseen issues that always happen comes into play. They always happen. So it is February in Maine, and a tenant's furnace needs to be replaced, or it's August in Florida, and an AC needs to be replaced. I mean, you can't wait days or weeks to get them replaced. And trust me, you're not going to get a warranty and try to have the warranty company like replace these within like 24 hours. Landlords need to be prepared for these situations when they occur. You have a legal obligation to your tenants, and that goes both ways. They paying you on time, but you fixing issues. I mean, not having an AC in Florida in August, I mean, it's not even a habitable apartment anymore. So these are really important things that you have to notice. The amount of liability you're taking on when you buy rental property that has tenants in there, or when you're leasing to people, I mean, the lease goes both ways. So it's important that you need to have a reserve fund for these things because you have to rectify them immediately once they occur. Now, why should you avoid investing in no money down deals? Well, investors with limited funds may find themselves in a difficult position when repairs are needed and vacancies occur. And investors expecting free passive income. These are the first couple things I see when I hear from people and they mention this, or this is their situation. This is a completely red flag. No money down deals are great if you're able to finagle a deal with them, but it's also, in many deals that I've seen in this situation with low or no money down deals, the investors have been seasoned and they are taking a distressed property and they're making a deal with it where they can come in and instead of using their money for the down payment, they're going to use it to rate the property. And that's still bringing money into the deal. It's just not going directly into the seller's pocket. What you're offering to the seller, you really have to understand, and then also what you're providing to them to show that you're going to follow through. Now, investing in real estate with little to no money down sounds great, but it typically requires creativity, credibility, perseverance, and lots of time, a high risk tolerance, and a strong negotiation skills. And when I've spoken to real estate investors who have been successful with little to no money down investing, the one thing they all have in common is that they have been at it for years, having looked at many properties and spoken to many owners before securing their first one. So I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at syndicationsuperstars.com. That is syndicationsuperstars.com. Look forward to 2 more episodes next week. See you then.
Have you always wanted to invest in real estate, but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.